Hello and welcome to the webcast on Trading the Trend. My name is James Boyd. Alongside me, Rachel Dashel in the chat. Say hello, Rachel. And we'd like to welcome all of you. Life in the Fast Lane. David, Debbie, Sam. Let me keep going here. Will, speak the truth. You always should. And Grace and Fayez and Fayez, welcome to you. Welcome to the United States of America. Hopefully you're down in the south, not the north, and enjoying the weather. So just real quick as we get started here, welcome to all. This is a live session. It's also being recorded. Now this session, we always ask the question, what trends are you riding? There has been some trends. We're not saying everything's trending up, but there has been some missiles of price action is the term we might consider using, shooting to the upside on some of these positions. Nvidia today down 9. We'll talk about that position. Understand here today that really as you build a portfolio, you like all of them to go up if you're bullish, but they're not all going to go up, okay? And so you want to understand that that's why you have a portfolio. Not everything's banked on one position. That's important to remember. Now remember as we get started, myself and Rachel, we do post educational content on X. There's Rachel's handle right there, at Rachel-CS for Charles Schwab. And you're going to also notice my handle on X, formerly known as Twitter, is at James Boyd CS. Remember that this session is being posted and live streamed right on YouTube. It's free. You could be on your phone, your iPad, etc., or on a Samsung, okay, for those users as well. You can also, for example, the playlist for this class is right here, okay? And so that way you could see, hey, what were some of the topics that you discussed in the past, okay? So I want to make sure you have those links right there. Bookmark those so you can just pull them up. Now, as we get started here today, remember that with what we discussed, we'll talk about stocks and options, right? The trend is not just options. It could be stocks too. Sometimes people like to have a mixture of strategy for reasons that we talk about, and we'll talk about that here today. Now, remember that the information we talk about is done for general informational purposes only. When we talk about this, the examples of technical analysis, understand that there's fundamental analysis that may assert some different views. Also might kind of coincide with what we're seeing on the charts as well. Also remember when we talk about our examples, we will do those on the Paper Money software application for educational purposes only. Remember that investing involves risk, including loss of principal. So the biggest thing is the capital that we're investing, the investor should have an understanding that they're willing to risk some of that to see if they could get a return. Without that, there's no reward, okay? You take risk. That's what happens. And so also understand when we talk about examples, we will do those with the idea of probability analysis. It's theoretical in nature, not guaranteed. Those probabilities can change. Let's take a look at the indexes first, and then we'll talk about sectors, and then we'll break down some current examples of trends, and also when we talk about those, we'll talk about some new examples and then past examples. First off, kind of what is standing out here today? Well, since the VIX is on the chart, let's just start here. Now, if you take a look at the VIX, the reason why we care about this, if we're trying to ride bullish trends, we want this to go down. We said last week that we like to see the VIX kind of stay in this range. So far we have been. The trend, if that's true, that the VIX stays in this range, you're probably going to see a neutral to a bullish equity market, okay? Today, we actually almost saw a brand new fresh low, not quite, okay? That low right there, the low being right around 1687, and we're within maybe about 50 cents of that or so. But nice to kind of see a little push down on the VIX. Now, what has kind of stood out a little bit here today is when you take a look at the Dow Jones, and kind of the basis of what we've been talking about is we talk about cup patterns, right? Continuation patterns, V patterns, all the above. And when we kind of see more of an intermediate pullback, you know, we're kind of thinking on the right, we talked also about cup and handles, right? And it's not unusual to think that when you go from the very high down to the low, it's not unusual that that flag is maybe about 2 weeks or so. It's not unusual, okay? It's probably about the average in a bullish market. Now, if you take a look at this, today we actually saw for the first time in a little bit the price get above the shorter term moving average. Now, what does that tell us? Well, you get the price above the short term moving average, you get more examples of stocks that probably are getting that momentum back. They could be going from the flag to where they could start to do another pull. All right, now wait. If you get above the 10, that was the bearish line of resistance. You get above it, the bears are losing control. Their stops are probably right above that. Second, we're now at the 20 period moving average, knocking on the literal door. Okay, so if we take a look at this, what you're now going to notice is big, large, bullish engulfing candle. Now, if we were to just look at this chart only, we would kind of see that maybe the resistance, maybe right around 500, which is 50,000 on the Dow Jones Index. And I can remember like yesterday when it was at like 5,000. Okay, here we are 10 times higher, at least. The biggest actually thing is when you take a look at this is some technicians would be thinking, hey, could we be going from that flag to now this would be your classic cup and handle pattern. Now, ask Rachel what she knows about cup and handles. And we're not talking about the cup and handle at the coffee shop. Right, Rachel? All right. We got to get Rachel in on this conversation. All right, now, super quick on the SPX, okay? The SPX never even really came back. It actually blew through the 7,000. You actually saw higher levels of support, and you haven't even had more than 3 days down in terms of red candles. You actually kind of saw a drift sideways. I call this bull flats. Who made that term? I did. Okay. It just kind of consolidates. It doesn't really flag or pull back. Again, what does that probably tell us? The path of least resistance on the SPX is probably higher. I think the major takeaway from the SPX here today is when you look at the equal weighted index, okay? We had not been seeing better participation from the equal weighted index where all sectors are equally weighted, like say 10 sectors, 10% each. You saw a better movement there. You also saw a better movement in the S&P percent of S&P 500 stocks trading above their 200 period moving average. That was better. Obviously, we just saw breadth. But if we actually look at the 50 period moving average, slightly better. So you want to kind of see the percent of stocks above the 50. You wanted to get higher. Above the 200, get higher. And that S&P 500, the breadth to get higher. Okay, now, so also just real quick, when we look at the NASDAQ real quick, that was a brand new high today. I know what you're thinking. I'd like to see that a green candle. We'll just join the group. Okay, of course we would. We did see some intraday selling where we actually pushed back to the upside. Most notable as far as actually tech stocks, Mr. Google, doink to the upside. You knew that was coming, right? We kind of talked about that, and we'll look at that position in just a second. Amazon, I don't know. I mean, it went up to 273, got knocked around a little bit. Overall, not life-changing here, down, 1%. Clearly, some people took a little profit here today, and I'm not going to ask you, was it you? It was somebody, okay? Now, but not really changing the trend, but the price did get knocked around like a piñata, okay? Now, when we actually also take a look at the Russell, that one also kind of looking very much like the Dow. The thing about the Russell is you got above the prior high already. So the Dow's still lagging, but maybe the tailwind now to the Dow could be with the US dollar getting pushed down. Could the Dow Jones Industrial start to play a little catch up? Okay. Now, any questions just real quick? Any questions? Yeah. So the comment was, what does he expect to move off the cup and handle pattern? From the rim of the cup down to the base. Okay, rim of the cup down to the base. Now, fast forward, I want to kind of just flash a couple positions. So if I pulled up industrials, okay, and when we say industrials, what is the one stock when you think about industrials? It is what? 3 letters by a vowel. The middle letter is A. What else do you got? You got Caterpillar, okay? Caterpillar Industrials smashed to the upside. It's only up 84 points, 10%. Just a little move on. Meow, kitty cat. Now, if we take a look at industrials, sometimes when you look at these cup and handles, a lot of times you're going to see them, they're horizontal. A lot of times. Sometimes you'll see that they have a little bit more of a slight diagonal slant to this. Could the methodology of price measurement still be the same? Sure. It's just going to be at a slightly slanted line. Okay. So here you got industrials firing back. When you take a look at energy, and we talked about this, kind of seeing with oil kind of pushing back up, could you see some of the energy stocks go back up? We'll talk about Chevron. We did a trade on that. I want to look at two others here today. When you look at financials getting a little bit of a push right at 640, keep an eye on that. Obviously, discretionaries, keep an eye on that if we're going to get a move. And also, keep an eye also on healthcare, utilities, IXV, okay, healthcare, IXU, the utilities. Keep an eye also on staples as well. These have kind of started to get a little move. Sometimes people like to buy those areas, the groups, the stocks, when the volatility is lower. Just keep an eye on them, okay? That doesn't mean that someone's whole entire portfolio is in that area. It doesn't mean that, okay? Now, let's go back to just real quick. First stock we want to take a look at, NVIDIA, okay? Now, NVIDIA today here got knocked around. Show me the position. Well, which one? When we take a look at, let's say, NVIDIA, and let's pull this up just real quick. Let's go to, no, we got it there. First off, we have shares of stock. Not a ton, but we got some. And you're going to see that the stop is down there. We could totally move up the stop there. Gave plenty of room. This stop needs to be adjusted to the upside. Okay, I'm just going to kind of move it underneath the 195 or so. Okay, you could probably even move it underneath the 199. It's probably going to get you right around that 195. This is for the shares. Okay, now the other position, the target, how close we come. Target fell short of that, 223-ish. We got to about 216, so about 3% away. And now what you're going to notice is big red candle here today, and you got the earnings section coming up on 520. What's the other position? Go to the trade tab. Now, one of the things that people, need to understand is with a market in some cases that has been more volatile, or some sectors that have more volatility to them, some investors might choose a different type of strategy where the sensitivity of directional movement is not as high. Well, the NVIDIA short put that we actually have, the 210, 205, that's down. Okay. You're going to see that the 210, 205, that's down. If I looked on a day over day basis and say, based on today's move of $8 down, how bad was it on that position here today? If you don't mind, I'll show you. Let's go day open. Now, when I look at that position, how bad was it? Well, grand total, with NVIDIA being down $8 or about 4%, it pushed all the positions, okay, down $327, less than 1%. Now, would have liked it to be up 1%, but so far it's down day over day, down $327, about 0.75%. So don't like that humble pie sandwich, but so far it's getting pressed down. The stock is getting closer to the stop, and the verticals, why someone does verticals? To take some bigger fluctuation and let that trend try to trend, okay? Now those positions are not anywhere near max loss yet, but they're pressured, okay? Now, just real quick, when we also go back to the other example, which is Mr. Apple. Does Apple have earnings here today? Anyone? Anyone? Does Apple have earnings here today? Now, one of the other examples we've been doing, our strategies, is trying to buy shares, but try to say, well, maybe I don't think it's going to go up a ton, but I'm really more mindful about protecting my capital. I think most investors would say, geez, don't you have to say anything more? I'm kind of interested in talk more, okay? Well, the example that we've been talking about is like collaring. We've done a couple of examples. In this portfolio, we have at least 3. Well, we need to talk about this for just a second because today in the after hours is earnings. Now, you might have been thinking, well, James, I've done my best to pump the earnings up myself. And I'm saying you might be thinking that. Now, if we take a look at this, we have 100 shares of stock. The shares were purchased at $254. The stock is at 272. Couple bucks on the shares. If we click on that right there, you're going to see that when was that purchase? About a month ago. Now, if you take a look at this, we have the 265 call. Well, that's the obligation to sell the shares at the strike price. Where's the stock now? It's at 272. Now remember, anytime you sell that call, okay, they can buy those shares at any time from the time that you sell that call all the way to the expiration. Now, here's what the misunderstanding is. I thought if the stock price, the current stock price, went above that short strike, it was going to get called out. Not necessarily. The buyer of the call has the right until the expiration. They can exercise that right whenever they want, if they do. So number one is we're in the money on that. Now, if we're in the money, is that bad or good? Well, what was the goal? I wanted to make money, the investor says. We'll talk about the money in just a sec. Now, we know if the stock, for example, doink, goes to the upside, that 240 put, that's not going to be worth a lot. So let's draw it up. This is where we got in the shares. Draw it up. This is actually where we actually had the short call, 265. And the downside was really, in this case, 240. All right, now we got to ask ourselves the question. Where's the stock? Well, the stock at 272. We're right up here. All right, now we want to ask ourselves the question. What should we do with the position? Okay, what should we do with the position? Well, this is where we got to do some basic math here. Well, if we agree to, let's say, if we bought these shares at 254, we have a max gain there up to 265. Check me on that. It should be about $10.68. Can you verify with me that that's true? 10.68. I think it is. Now, we got to ask ourselves the question. Did you receive a credit or a debit? Well, you received a credit of $6.95. And you paid $6.25. So you actually got 70 cents. Now here's the thing is, did we know which way the stock was going to go? No, I didn't have any clue. Okay. So our maximum gain on this is, if I did the math right, we got 1138. Okay. 1138 is the maximum gain. How much do we have actually now? $773. Now, you need to make that call, right? What percent of that maximum gain do we have? I need help here. Don't leave me hanging. 773 of 1138. I'm just going to pull out a calculator, okay? I mean, this is just basic math. I don't think this is riveting. 1138, it's about 68%. Now, here's the thing, as investors, we can be greedy. We always want more. But what was the goal of the trade? Well, the goal of the trade was, if we can make 100%, we'd love that. If we can make 80% ever, second. If we can make more than 65% with more than 20 days to expiration. If we can make 50% in the first 10 trading days, you might even consider taking it. And when you say taking it, what does that even mean? Well, that means you're going to exit the whole entire thing. Why? Because the goal is to make money. That's always the goal. Okay. Now, what would you do? Would you say, yeah, I'm going to go through the earnings, risk the 68% plus max loss? Well, you might say, well, that would be foolish, James. You have less reward than what the risk is. Now, you could actually identify what that risk is, but I think we've kind of tilted that reward is getting smaller and smaller and smaller, and the risk is getting bigger and bigger. Now, if the investor says, look, I don't want to go through earnings where I don't control what's going to happen, I'm going to try to go in here and exit my position. How do you close it out? Well, hold the control key down if you have a PC. We're going to click on the call and the put first. We're going to right click while holding the control key down, create closing order, and we're going to buy it back. Now, here's the funny thing is, we are a stock trader, okay? But what I'm doing is I'm using the call to pay for the put. Why? Because I wanted to make it where we define the risk to the downside. We are stock investors, but I wanted that put to lock in not a theoretical right to sell, I wanted to have a defined right to sell from now into expiration. Having a put is not the same as setting a stop. Okay? If you go below the stop price, it triggers the sell. When you go below the long put strike, you just have a right to sell. It's not selling anything. You control that right until expiration. That stock closes below the long put strike below on expiration and on the expiration, that is the sale of the shares at the strike price. It could be exercised automatically, irregardless of if you're there. Okay. Now, could you go in automatically and do that yourself? Yeah, right click on that line, say exercise. And if you have the put, what does that do? It sells 100 shares. If you had 100 shares and you sell 100 shares, how many shares do you got? 0. Now, create closing order, sell it. Well, in this case, we're going to buy it back. Got the mid price, confirm, send. Note the commission, $1.30, send. Now, we want to make sure that this fills first. Why? Well, why? Well, because first off, if I get rid of the shares there first, that means I have a naked call. This doesn't sound good, does it? Right? So you just want to make sure that in this case, hey, naked really meaning that we have an obligation, but we don't have the shares. So I want to make sure that fills first. Once this fills, then we'll come back in, just right click on the shares, create closing order, and just sell that shares. That's all it is. It's a two-step process. All right, now, if we take a look at this, yeah, exactly. Okay, so that's why I said that. We want to make sure that the options fill first. Once they fill, then go in and actually sell the shares. Okay, we talked about NVIDIA, we talked about Apple. One loser so far, and then we talked about Apple, a gainer. Now, let's kind of go back to something just real quick. Now, we never said that we couldn't just adjust the strategy. Okay, now here's the interesting thing, right? If I bring up, let's say, Apple, if I ask you a question, what do you think the trend is? If I ask you a question like, do you think that trend is maybe going to go, do you think on earnings it's going to go higher? Do you think it's going to go sideways, or do you think it's going to go lower? Is there a way to maybe place a trade, just change the strategy? Thoughts? Now, again, we're trying to get out of the other position, but it doesn't mean we can't put on a new strategy. Now, as I'm getting an answer on that, I'm going to go back to let's say that 3-year weekly chart. If I were to pull this up, you just have a big old W pattern, right? A little run to the upside, a little pullback, drop down, hook to the upside. Now, a lot of times people say when you look at divergences, do you have to have a lower low? I haven't seen that. Okay. The textbook is going to tell you, hey, get a lower low on the price. I haven't really seen statistically that it's made that big of a difference. So when you go back and really look at that you got a low, you really got an equal low. You are seeing that MACD, it's not getting as low, and that MACD on the top for the first time in a while since December. This isn't every other day where that MACD has been building. Now, if we wanted to do a strategy over the earnings, okay, where maybe that price might move up, and it's a speculation. You don't know what's going to happen. You don't know how investors are going to respond. Now, Zach actually says try a short put vertical. So here's the deal. The investor is saying I want to be bullish. They're just saying I just want to do a different position where it has a defined risk, okay? And we're not risking all these big gains that we've had already. So let's lock in here. And what I'm going to now do is let's go to the trade tab, okay? And what I'm now going to do is going to go to the trade tab. Now I'm going to move this price around because that's not filling it. And let's try to move it around here real quick. See if it fills. Now, why that fills, we're going to go to that May. I'm going to go to the June expiration. Now, the Mays, they only have 15 days left. Now, let me just real quick. I'm going to keep the May monthlies, and I have the June monthlies. Now, 35 IV actually on the Mays monthlies, and 30 there. Now, the nice thing about if you went farther out, and if you get price moved like you did on NVIDIA, the ones that get creamed up or down, good or bad, is the front dated options. it's not to say that if you get the price to go against you, it's not going to be bad on the Junes. It's just probably not going to be as bad. Now, if some people say I hate earnings because I don't want to kind of have, number one, you're running out of time. Number two, you have an adverse price move. Well, just change the expiration, change the strikes, change the strategy. I mean, let's think. Okay. Now, let's say I was all three of those in this example that I wanted to kind of play that role of that investor who says that. I'm going to go and actually say, look, we're going to sell the 260s. Well, what delta is the 260? Well, the delta of the 260 is 29. The investor might sell lower delta, lower strike if they want to be a little bit more conservative. That doesn't mean they're not taking any risk. They're just saying, look, I don't want to sell a strike as close as we are to the current stock price. We're going to sell the 260 and we're going to buy the 250. Now, Pia, can you give us a translation when I say 250? Can you tell the other folks here when I say 50 what that means in English? Okay. For some of you who never lived in the South, which is maybe the greatest place in the United States, some of the nicest people you meet. I'm saying there's not nice people everywhere, of course, but some of the nicest people that you'll run into are in that South. You define where that is. Now, if we take a look at this, we're going to say that, look, 220 credit, confirmed send, max loss 780. What you're concerned now, when you see those numbers, when someone says, look, I never do that trade because you can't make as much as what you would lose, well, you don't understand the strategy. It's a probability type trade. You're saying what's the gain to the loss given the vertical, and then you're looking at the percentage, also known as the return on risk, 35%. It's a little higher, of course, because we are going out to the June. Yeah, bless his heart. Yeah, look, I tell you what, I grew up in upstate New York in Ithaca, and I moved to Bowling Green, Kentucky. And man, it was amazing. Called my friends back up north after a month of being down there, and they said, man, you sound like you speak hee-haw. And I said, does my southern twang sound that bad? They're like, man, it's pretty bad for only 30 days. Okay. And I say that jokingly. They're great people. Okay. Now, here's the deal. What I'm going to do, and I'm going to go ahead and there's the credit, there's the commission, send the order. Now, if you don't know anything about me, I was born in Nebraska, lived in upstate New York, then lived in 5 different places well, actually 6 different places in Europe, 5 in Austria, 1 in Germany. I live in Utah now. I just love different slang, if you will. I love just, I don't know, how people talk. It's just great to me. Okay. Now, I want to go back to, many of you made mention about energy. Okay. Now, I'm just going to take a quick peek. Now, by the way, no one told me, or if you did, I didn't see it out of the corner of my eye. Those came off. So now what am I going to do? We're going to right click on that, right click, create closing order, and then sell. Okay. Now here it goes, sell. Now, once I do that, I'm just going to sell those shares. So now going over earnings, we don't have, okay, the shares. Now understand, okay, this delta scale, just super quick, okay? If we have shares of stock, I mean, if this is, the stock is at 0 or it moves $0, if that stock goes up $10, okay, the stock goes up $10 or goes down $10, times that by the shares or delta, okay? So if you had 100 shares, 100 delta. Delta being the profit and loss, okay, on the option position, approximately. So if you have 100 shares of stock, you get a $10 move up, big gain. Stock goes down $10, you have 100 shares, big loss. Now, it's not realized maybe, but it's unrealized, right? So that's why the investor is saying, look, A is I could go a lower amount of shares. It's an option. Or maybe actually pick a strategy that just has a lower delta, a lower change in the profit or loss on the position. That's all we did really on Apple. Now we want to make sure that fills, and we'll just kind of give it a sec and see if it can fill. Now I'm going to go back to just real quick. We made mention of, again, Chevron. Super quick on Chevron. When does Chevron have earnings? When do they have earnings? Tomorrow. Okay. Now you got to remember something. Chevron what do? How do they make money? How do they profit? What type of products do they sell that could influence their fundamentals? Okay. Well, we're not going to pull up soap. We're not going to pull up Coke or cornflakes. We're going to pull up crude oil. We're going to pull up natural gas and so on. Now, we know that what's been interesting to some degree is oil. It started to move back up. Now, if we start to see oil up higher for longer, well, those traders and investors immediately, they start to say, hey, those earnings might be higher than what we thought. And if Chevron gives guidance, hey, look, we think actually the oil prices might be up for higher for longer. Therefore, we're going to raise the forecast. Now, some of that's already built into the price already. But if they guide forward in the next couple of quarters, a year, et cetera, they think their profits could be potentially higher and so on. Well, maybe it's not factored completely into stock, and that's when you get gaps like we saw in Google yesterday. Now, I'm going to go back to this other one. So we have, what's the position on Chevron? The trade is on Chevron is, that was shares of stock we actually did. I'm going to go back to just real quick the other one, which is Exxon. That is in the same camp, maybe not been as strong, but I'm going to also show the other one we talked about, FANG, and then BKR. Now, we talked about BKR yesterday, just being an example of a close above the high of the low day example. All right. Now, that close above the high of the low day, we're looking at the lowest, most recent red candles. Well, the most recent red candles were two side by side. The lowest of those two was April 28th. Next, the high of that day was 69.71. Now, why are we not showing a Cajole dot yet? Well, we're not showing a Cajole dot because we're not currently trading above that price. Now, today, if we poked our nose above that high, could it have been traded above the high of the low? Yeah, it could have. Now, let's say you said, James, I'm a stock trader, and I like to trade flags. Now, if we actually said, I'm going to right click on the chart, buy custom, I'm going to go with OCO bracket. Now, one of the things that's kind of interesting about flags, if the investor can spot those, which shouldn't be that hard if your list is small, if you could get in that first, second, or third day of the bounce. Now, how do you know where the bounce is? The bounce is actually where the stock stopped going down, which is shown by red candles, and the bounce up is shown by green candles. So if we're not, let's say that today we close and we get a Cajole. Well, today would be day one. Well, if it's day one, it means you're closer to the support level. Hallelujah. Okay, now, here's the thing great about being a technician. With a technician, it's almost like we're going to close it, we're going to plug our ears, la, 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 can't hear anything. The investor is only trading what they see on the chart. Now, in my 30 years of doing this, in the last 30 days, I think there's been many investors. I don't have data to prove this per se. Well, to some degree, okay, not personal data, but the way I've been reading, and I see a lot of stuff out there. I think this move in the last 30 days has probably been the most misread market in the last 30 years. And I have a pretty good memory. And what happens is people get sucked in to the news and they become emotionally hijacked. Have you ever been emotionally hijacked? I think we all have. The technician's job is to just become focused on the charts and to become Swiss or neutral to the emotions. Okay. Now, if we looked at this chart and said, look, now, by the way, could news move the price? Of course it can. Of course it can. But you got to also ask yourself, the question is, why is the price being able to hold up? Okay. Now you got to understand something. If you're saying, hey, things are negative and oil price is going up, that doesn't mean that everything is going down. we saw that historically some of these energy ones went up. Well, that's what we're doing. We're kind of trading that energy. We're trying to play where there's actually relative strength. So if I go back to this and say, where was that target from yesterday? We're going to try to add to the position here. Well, that is going to be right at $78. We're going to try to add to it again. Now, remember what a lot of investors actually do to begin with is they just enter a position, and that's it. What you'll find with investors that have practice is they're not probably entering one position. They're layering on positions. Okay? I mean, think about something. If someone invests in real estate, do they just invest in one house, one townhome, one condo? Probably not. I mean, if they have a portfolio, that is just one position, and they layer on top. Does a business just have one product? Nah, they layer on top, and that's what investors, what we're doing. We're laying on top. We call it dollar cost averaging, but we're just trying to say, look, if you get the trends, we're trying to add to the position, dollar cost averaging, or trying to also trade relative strength. I'm going to put the 78, limit GTC, stop GTC. When we actually go back to this, and again, we're not going to become emotionally hijacked. We're just going to go back to those timeless principles. Okay? Going to layer on capital that is not too much, that the investor is willing to risk, fully understanding that they could lose that, but they're fine with that. Okay? Nobody wants to lose, but they know that they have to risk economic capital to see if that trade could play out. They know that. Okay? Now what I'm going to do is go confirm and send. Notice how what the stop is saying. If it goes to that price or less, sell the position. Now, there it is. Is this a stock or an option trade? It's a stock trade. Okay? Yeah. If we send the order, there you go. And sorry, I'm just out of money in the margin account. So just out of money. Okay. Now, here's the deal. If we take a look at this, I'm going to kind of show a couple things, then I want to go to questions. Fast fire just real quick. Okay. Couple things that we want to kind of keep an eye on. Okay. UNH, which we kind of made mention of, we had an example. We showed a position where we added to that. UNH is still holding up there. It's not really checking back to that prior area of resistance. Some investors might be thinking it's still bullish. The CRM software, the Adobe of the world, and Microsoft of the world, man, those software names, they're still under pressure. So I'm saying that in this market, not everything is the same. Understand. Now, if we take a look at some stocks, for example, that are showing kind of some maybe pushing back to the upside, Marvel, which kind of has an interesting fundamental story as well to it. Not much of a pullback after a bombs away to the upside. Last 30 days, it almost went up 100%. Okay. AMD hit a brand new high. Column almost looks like Marvel. Okay. And then the last one before I go to questions is a stock like Cisco, which also had a short-term fleek. Not much of a pullback. That old high was there, and a check back, and getting a brand new doink to the upside. Now, let's go to some of your questions here. Now, here's the deal. Now, Sam actually says, lost my shirt on Salesforce. So the question we got to ask ourselves is, why? Now, when you say things like lost my shirt, A, was it overcapitalized? 2, did you have a stop? 3, I mean, what strategy did you have, right? In this portfolio of, let's say, a margin account, okay, we said, well, look, we're not willing to risk more than 1% of the portfolio. Now, if I said, man, we lost our shirt $450 or 1%, I mean, I'm just waiting for Sam to clarify. That's not losing our shirt. That's just saying I hit full max loss. Now, on the IRA, if I looked at this and said, well, on that $162,000, 500-ish, we said, well, look, we're not willing to risk more than 0.75%, which means the loss should be at or lower than 1218. Now, let's say the loss was 1,500. When could that happen? The stock gaps down. Let's say the loss was $1,600. Well, that loss is $1,600 and we're at 162,500. What does that mean? We didn't lose 0.75%. We almost lost 1%. Now, I'm just going to be brutally honest. James, have you what was that? What was the word? I just want to go back. I lost my shirt. Okay. James, have you lost your shirt on certain trades historically in the market? Yeah, absolutely. James, can you blame the market? I can't blame the market. I mean, I'm just being honest. Sometimes smart people can do foolish things. And I've gone down that path and I know it's a dead end. So the moral of the story is you got to ask yourself, if you had those situations, was it something you did? Did you try to control the risk? Did you have a stop? Did you over position size? Did you break any rules? The other thing to understand is sometimes it can go above that risk if that stock gaps down. That stock actually gaps down. Might you consider something where you could try to control that risk more? How could you improve if the loss was bigger? All right. Now, I'm not saying in this case, now here's the deal. Sometimes we are going to have those losses. It just happens. Okay. The goal is we're trying to have more good ones than bad ones. But the thing is, those bad ones are going to happen sometimes. Okay. You got to think of this like if you were a JP Morgan bank and you ask Jamie Dimon, do you have any car loans that go bad? And Jamie Dimon starts laughing at you. Of course they do. Okay. So just because they have some car loans that go bad doesn't mean they're not profitable. That's the point. Don't forget that. Now, any other questions? All right. Now, let's see just real quick. Any other questions? I just want to see if you have, now, if we went back to just real quick, let's go back to one of the questions, AMD. Now, what I'm going to do is I'm going to kind of go to the AMD, okay? Now, AMD, the comment I made yesterday, which is, hey, just because the stock is high doesn't mean it's overvalued. That could be a whole class by itself. Last one in literally 1 minute, okay? You got earnings on 5.5. What I'm going to do on this is if we said, just to kind of show this point, if we said in this case, look, I'm going to try to sell, okay, and I'm going to choose the one that's probably a little bit tighter, try to be a little bit tighter. I'm going to try to sell this one. It's going to be a little bit lower on the delta. So here's the deal. Let's answer this question again. Why do some people like verticals? Well, if this stock even went to zero, given a vertical, the most the investor could lose is 600. So if we lost that full 600, which is possible, well, if we lost 600 and we're at 162,500, that means that we would lose 3.5%. So you got to put the loss in terms of a percentage. And where's the loss in terms of what you're willing to lose? Okay. Now I'm going to go ahead and actually send an order, but that's why we've been doing a lot of verticals to allow for the fluctuation and then have built-in buffers. Now I'm out of my time here today. We got Brett Crowther coming up next with short verticals. Here's the big thing is you will go light years ahead in your learning if you sell out to risk management. That is the most important thing. How much are you willing to, how much are you going to invest? What are you willing to risk? And then when you have gains or losses, you gauge that compared to when you have the losses, how much of that, where's that loss relative to what you're willing to actually accept? And that's it. Okay. And over time, you learn to hone the strategies. And sometimes it is the investor. And I pointed myself out. Okay. But don't beat yourself up too bad. Okay. We all go through that learning process. Now, remember with what we talked about, it was done for example, illustrated purposes only. Hit the like button. That way other people could see this content as well. Thank you, Rachel, for answering those questions in chat. And also want to give us a quick reminder that don't forget to subscribe to the Trader Talk channel. It's free. Also join us tomorrow on Education Day. Kevin and I will kick it off right in the morning. Join us live. Thanks so much for joining this session on Trading the Trend. Stay tuned for Brett Crowther coming up next. Take care. Bye-bye.